The big calendar event of the day comes in the form of the monthly jobs report out of the U.S., though a lot of this may now be overshadowed by the news that President Trump has contracted the coronavirus and the impact this could have on the upcoming election. As things stand, the jobs report isn't expected to be all that rosy. Job creation is expected to drop well below 1 million to 850,000 in September from 1.37 million previous, while the unemployment rate is only expected to show a mild improvement to 8.2% from 8.4%. We're getting into that critical phase where the market is going to want to get a better handle on just where the U.S. and global economy are headed after what was a widely anticipated and well-telegraphed recovery from the worst of the coronavirus. Will the data show that things are looking good with respect to continuing to move in the right direction, or will the data show that the outlook is more distressing, with many full-time jobs no longer there and that path towards where we were pre-pandemic very far off? What makes things even more sensitive right now is where we're at ahead of a critical election in the U.S., and all with the market desperate for additional relief that may not be there. The Federal Reserve has been more vocal about how exhausted its efforts are now, and the news around the next round of stimulus from the U.S. government hasn't been all that reassuring. If today's report comes in better than expected on the whole, it could give stocks a nice boost and open renewed interest in currencies against the buck. On the other hand, if the data comes in weak, look out for lower stocks and a higher dollar. We're less optimistic about stocks trading higher on bad news these days because of the already mentioned exhausted bag of Fed tools. But again, all of this analysis becomes that much more difficult with markets already in the volatile mood on the President Trump coronavirus news. That's all for now.